This week on All About Stocks, the weakness continues in the markets. The Sensex spends another week below 19,000. Find out how you can make the most of the falling markets. Valuations of several blue chip stocks plummet to record lows. We'll tell you if it's time to start buying. And we'll revisit Gaurang Shah's portfolio to make sure you're getting the best possible returns from this market. Welcome to All About Stocks. You're watching ET Now. We've had another testing week at the markets, although we didn't trade all week. There were a couple of holidays. The Sensex spent another week below 19,000. This week, let's find out how long the pain is going to last. We'll also find out how we can take advantage of this slump and pick up some good stocks and add them to our portfolio. Remember, there's an email ID at the bottom of your screen where you can send in any question you have about your stocks. Now, before we go any further, my colleague Ajay is here with a wrap of how the markets traded this week. Ajay, take us through what happened and take us through what the brokerages are saying is going to happen in the future. How long is this thing going to last?
Well, that's correct. It was almost a very flat kind of a market this week. Got to do with the less number of trading sessions this week due to holidays. But if you look at the March series, which also expired on Thursday, almost a 0.25% cut coming in as far as Nifty and Sensex is concerned. Also, a lot of support the market was witnessing around the 200-day moving average on the Nifty at 56.18. So almost thrice Nifty found support there and bounced back before the short covering rally which came on the last trading day of the week. Cyprus bailout concerns, that was a big issue which continued to weigh on global markets, including India. So every time there was a negative news flow from Cyprus, we were witnessing a huge amount of selling in the market. So that was a key data which weighed on the sentiment. Going forward, traders are saying that macro data like inflation, IIP, and of course current account deficit data will weigh in on the sentiment and direction of the market. But the principal driver of markets going forward would be the Q4 earnings, which will actually start kicking in as far as the April series is concerned, and that will mainly derive the direction of the market going forward. However, the extent of active shorting or active selling is easing out according to traders, and only the brave will go out and short the market at 200-day moving average when Nifty has taken support on it almost twice. So in that sense, the traders are expecting relatively better series for the April or the 1 month ahead than what it has been for the last 1 month.
All right, Ajay, thank you for that information. Joining us today is Gaurang Shah, the Assistant Vice President at Geojit BNP Paribas. Gaurang, thank you so much for spending time with us this week before our long weekend. Second week in a row below 19,000 on the Sensex. What's your advice, first of all, for investors who are watching? And tell us how long you expect this to continue.
This correction that we've seen on the indices, Sensex and Nifty both, some of the sectors and stocks have corrected even sharper, especially what we've seen the carnage in the mid-cap and small cap. Now, I really see a lot of value in terms of sectorial picks. You need to be extremely stock specific. And when you corrected this much, I guess you cannot rule out another 50 to 100 points correction on the Nifty and maybe about 300, 350 odd points on the Sensex. Now, why are we saying that is because of the fact that you have a lot of uncertainty in terms of political issues and the circus that is going on in North Block. And of course, you have issues in terms of Eurozone. But yeah, we are not going to be here for a long time. Its markets have corrected given an opportunity. So I feel that one should definitely look at sectorial pick themes and get and participate into the market rather than shy away from it.
All right. So if you're looking, if your advice is to look to buy at this point, could you give us some guidelines? What should we be looking for when we go shopping in the stock market for our long-term stocks?
Avoid sectors which are related to the government policy decisions. And we've already seen power, infra, broad construction companies going in for a tailspin. We've seen consumption slowing down, so we've seen metals take a knock on the chin. We've seen interest rate scenario, though there was a cut of quarter basis point on the repo this time when the RBI governor announced its policy. But I think going forward, if you're going to have a higher capital account deficit, then the elbow room for the RBI governor becomes even smaller, and I don't think that will follow. So you'll see autos, banking and interest sensitives, be laggards over here. So what we would possibly prefer is IT. Of course, that's one particular sector that could possibly be an outperformer, especially mid-cap IT names like Mindtree, Persistent System, HCL Tech, Mahindra, Satyam, to name a few. We feel consumption theme will definitely look a little bit better given the kind of state elections that you have lined up. for the rest part of the year till the time we go into the general election next year. So we like names like Godrej Consumer Products. Healthcare is another theme that we follow very closely. So Apollo Hospital is one that we like. We also like some of the names in the pharma pack. So names like Cipla, Glenmark, Sun Pharma, Lupin. I think you should possibly be staying with these, 3 or 4 broad sectors and the names that I've listed down, and use opportunities to buy these stocks, at least for the near term.
Gaurang recommending we stay between the IT, consumer, the healthcare and pharma sectors if we're picking stocks right now. Gaurang, Ajay was also telling us that a couple of stocks are hitting lows at this point. There's Kane, Tata Steel, BHEL, Hero Motor and Reliance Infra. These are the ones that he's named that have really taken a beating over the last 2 weeks. Anything there that you think we should consider?
We do feel that on the fundamentals there is a much more better story and theme in names like Reliance Infra in the entire ADAG pack. So we are positive over there. Hero MotoCorp, however, I feel that there will be some amount of strain in terms of numbers month on month. Performance of Bajaj Auto could be much better in terms of comparison when you do a two-wheeler sectorial analysis. So we feel that Bajaj Auto is the preferred choice. So yes, we like names like Kane India, Tata Steel, Reliance Infra. These are some of the names there. And of course, some of the stocks in the large cap has actually gone and hit a 2 or 3 year low, not only a yearly low. So there are concerns over there, but we feel that these are possibly short-term concerns.
All right, we have a question from Aniket, who's holding shares of HUL, which he bought at 459 rupees. He wants to know for how long should he hold on to this stock?
My belief is that, bad days are done with. We saw the correction come in, like you rightly mentioned, post the numbers and the royalty payment that we'll have to make to the parent over the next couple of years. So we feel that the correction is already done with. The negativity is priced in. If you hold on to it, my advice is to hold on to it. Possibly you could see targets about 520 with about 12 to 16 months time horizon. So hang on to it. And then I think possibly any news or any kind of acquisition would also, throw up some more positivities on HUL.
We have Brinda who's written in 100 shares of PNB bought at 880 rupees. When can I expect a recovery in the stock? The stock end of the week is 713. Now, among the banking pack, how much promise does this particular stock have? Is it the best option for her right now? And what should she do with her holding?
So yes, the bank is good. There's been a tremendous amount of turnaround in terms of quarterly numbers, year-on-year numbers. I like the story, but her upside looks quite limited from where she has got entered into. I think with 12 to 16 months time horizon, she could possibly see a target of about 975. That's where she could possibly look out to book. But in case if she's got the investable amount, then I think from the levels of her investment, the stock is corrected, and I feel that she could, if she has investable amount, then she could possibly average out half the quantity that she's got.
Okay, we have one more question from Vijay Modi. He wants to know if it makes sense to buy shares of Reliance Power at current levels. It hasn't been a very good run for this stock if you look at the one-year chart, but the PE is still higher than the rest of its pack and the rest of its peers in the industry. What would you recommend he does? Does it make sense to pick up Reliance Power at these levels?
I don't think that I would advise to buy Reliance Power, given the kind of weakness that it has got. And as a disclosure, we had a reduced recommendation when the stock was about 95 or 100 odd levels a couple of months back. And our target was, I think, about sub-80 levels, which it has reached and it has gone below that. So if you are wanting to stay invested in power generation story, then my belief is that you can definitely buy a name like NTPC, which is, of course, a recent disinvestment candidate from the government's chest, and we've seen small amount of correction come in 140, 135, 145 odd levels where it closed. I think your downside is protected with 1 year plus time horizon. You can easily look for a target of 200. But please avoid names like RCom and RPower because there could be too much of pain left still over there.
All right, time for a quick break. On the other side, we'll revisit Gaurang's portfolio. We'll talk about Mahindra and ITC and find out if you should stay invested in these stocks. Welcome back. You're watching All About Stocks on ET Now. Remember, this is the show that helps retail investors find long-term stocks they can put their money into. Gaurang Shah is still with us, helping us with our stocks investments. Gaurang, thank you for staying with us. Now, for those of you who are regular viewers, you know that Gaurang designed a portfolio for us in December. We've been tracking this portfolio since then, and every time he comes back on the show, we take a look at how his portfolio is doing. This is the list of stocks he's picked for us. ACC, Apollo Hospitals, Kane India, Cipla, Godrej Consumer, IndusInd Bank, IRB Infra, Mahindra & Mahindra, Mindtree, and Tata Steel. Now, that portfolio since December, Gaurang, is at a negative return of -5%. So, like you mentioned, Mindtree has done really well. It's given us 32% return since we bought it. Godrej and Apollo are also doing well. Worrying stock on this portfolio right now is Tata Steel. It's down 21%. Is that cause for concern? Would you recommend we hold on to Tata Steel?
Not really, and I'm glad that the portfolio is just down 5% because Sensex Nifty is down 8% from December till date. So I think I've done relatively better. And the cause of concern, not really. I'm looking at long-term growth stories. I'm looking at names like Tata Steel, a very sound management. I'm looking at that story to believe that consumption will definitely start looking good. Infrastructure, construction, definitely steel is the basic core commodity that goes into it. And if you're going to look at, GDP growth of 6.5% or 7% in the next couple of years, then given the fact that you have a very constrained environment in terms of infrastructure, you need to really improve that, and that's where the consumption will possibly start kicking in. So domestically and globally, I'm quite optimistic that the story is going to turn around for metals pack, and then over there, names like Tata Steel, Hindalco, Sterlite will definitely stand tall. So if the stock has corrected 21%, I find tremendous opportunity to average out.
Well, I also want to talk to you about Mahindra & Mahindra. It's down about 9.3% since we bought it, but we know that a lot of our viewers have invested in this stock. Could you tell us what's going on with this stock? Is there any reason to worry about it, or is this also something you'd like us to average out at this point in time?
Two launches in terms of verticals. One was the launch of SsangYong vehicles. The other one was a relaunch of two-wheelers, which has really not kicked off as per the expectation or what the company has possibly had in mind. But if I look at the other vehicles in terms of SUV, LCV, utility vehicles, passenger cars, if I look at tractors or agri equipment, those are the pockets where I see the performance still quite robust. So I'm quite optimistic that here again, and of course, this auto sector, four-wheeler, two-wheeler, is very closely linked with interest rate scenario. So you might see some sluggishness in the near term, but long term, again, optimistic, and my belief is that the numbers that will come out month on month for automobile, two-wheeler stroke, four-wheeler, I think M&M could do much better. So yeah, the stock has corrected, but again, growth is the story that we are following, so you should stay invested and average out in case if you have it at higher level.
Well, Gaurang, this is a good opportunity for us as investors to learn something. You did say that if the Sensex and the Nifty are down 8% since December, and we're only down 5%, that means our portfolio is doing well. So for all of our viewers who are watching at home right now, could you give them some sort of guidelines that they can use to currently evaluate their own portfolios and find out if they're on the right track, and if their losses perhaps are just in line with the market?
Well-diversified, balanced portfolio will definitely give you a better performance when you compare it with single or two or three sectorial portfolio, or when you compare it with the index, that is Sensex and Nifty. So keeping that in mind, I think it is always better, and there is a lot of time investors, retail or small or mid-size investors, have this habit of chasing something which was at 100, 200 rupees, now quoting at double digit or single digit, and expect that these stocks will recover. My advice is to please stay away from that. Large cap is the theme that you should definitely have in mind first. Preference should be given to large caps. Then, of course, you should put your investment under the microscope and look at some of the selective sectorial themes which are looking quite positive. Performance-wise, you have sectorial indices. You should look at that. That will possibly give you an indication as to how good or bad that particular sector is doing. And in this entire sector, if you bought something and if that stock is doing worse, then I think it is time to it should ring alarm bells, and you should possibly do some rethinking in your portfolio. So you should keep these broad parameters or thumb rules in mind, and then go ahead and make your strategy in terms of investing in equity market.
So remember, this is a good time for you to take stock of your portfolio and find out how you're performing. And if you want to make any changes, you can, of course, write to us on the email ID that's at the bottom of your screen. I'm going to do a quick recap of the stocks that Gaurang has picked for us in his portfolio. IndusInd Bank, Cipla, Godrej Consumer, Tata Steel, M&M, ACC, Mindtree, Apollo Hospitals, IRB Infra, and Gain India. Write to us if you want a copy of that list. We'll be glad to send it to you. We have a question that's coming from Emerson. He has 900 shares of EID Parry, bought at an average price of 154 rupees. He wants to know if he should hold on to this stock. What would you recommend he does?
Well, again, a sector, or rather, I beg your pardon, a stock which is very closely related to the sugar pack. And recently, we have seen the flip-flop from the government side in terms of deregulating or, incentivizing sugar manufacturers. But that has really not really worked out. And my belief is that the management is good, undeniably. The company is good. Volumes are not much. So if you have a long-term theory, my belief is that you should stay invested. The sector stock might attract some more time in terms of investment horizon. But then if you have a good stock in hand, you should stay invested. But my conservative return on the stock would be about 10 to 15%, nothing more than that, given the fact that it is very closely associated with what government policy does to this particular sector.
Mayank has also written in 50 shares of Titagarh Wagons at 266. Should he hold on to it? The stock has corrected drastically in the last month. It's down to about 166 this week. Now, what would you recommend he does?
Well, again, this is not really the stock which is absolutely the favorites amongst the market participants or investors. Has possibly one-off days in a year during the railway budget when you see some amount of performance coming in, and then possibly goes into an absolute hibernation. So my advice is to exit this particular stock. Maybe at current levels or maybe at any kind of pullback, we need to exit the stock. Don't expect any kind of miracle returns. Since I'm advising an exit, my view is that you should switch on to something like an IndusInd Bank mid-cap private sector bank. As a disclosure, we have a positive coverage and our target is about 510 with 1 year time horizon.
All right, before we go into break, one more quick question. Raj has 5,000 shares of Jaicorp, which he bought at 63 rupees. What would you recommend he does with that holding?
Well, ASAP exit, and we look at something like maybe a Dish TV or something which is more theme-oriented, growth-oriented. I think these kind of stocks are more damaging the capital rather than creating capital and value addition. So please exit this particular stock as soon as possible.
All right, time for a quick break. On the other side, stocks we're going to talk about State Bank of India, ITC, and Sun TV. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Remember, this is a show for retail investors who are looking to make long-term investments in our stock market. Gaurang Shah is still with us, helping us with our stock portfolio. Gaurang, it's time for us to look at your report cards from the last time you were here on the show. In April 2012, you recommended Sun TV when it was trading at 286 rupees with a target of 390 in 1 year. Now, it hit a 52-week high of 490 in February. Since then, it's come down a bit. But it's at 385, which is fairly close to your target. Would you recommend we book profits? And thank you for that strong recommendation.
So if you're not too greedy, if you want to take your money home, look at other themes that I've just listed down during the show, you can definitely do that. But if you really want to maximize your profits, I think keep the trailing stop loss profitable of the target that I had given out. And any upside you can possibly, go on increasing your profitable stop loss. But here again, I would like to point out, it belongs to a family which is having issues with the government. There are news flows which may affect the group company stocks in the same management. So you need to be careful and cautious over here.
All right, it's time for us to take a look at our portfolio query of the week. Remember, every week we pick one lucky viewer and we look at his entire portfolio. This week, Shivam Trivedi is our viewer. And he tells us he has a long-term horizon and he wants to know which of these stocks he should hold on to. Gaurang, on first glance, his portfolio looks really strong because he's picked some good, strong names. First on that list is the State Bank of India. He has 15 shares. He bought it at 2,198 rupees. What should he do?
State Bank of India, again, like I mentioned, this is one of the banks amongst the other banks that we are positive in the PSU banking lot. 2450 is the target, and I expect that if not this time around, the moment you see some relaxation in terms of CAD coming down, inflation coming down, growth possibly indicators stabilizing a little bit, I think you will see RBI coming and giving you rate cuts.
All right, next on his list is L&T, which he bought at 1,410 rupees. It's come down a little bit from there, but L&T is a strong company. Would you recommend he holds on to it?
They invested at 1410, you got invested. Our target is 1650. And if you get an opportunity to add more, maybe sub 1300 levels on L&T on any bad day, then my advice is that at least half the quantity you can definitely average. Thereby you will bring your cost of investment down.
Well, he does seem to be someone who watches the show on a regular basis. He's picked ITC, which he bought at 298. That stock is ended the week a little above 300. Would you recommend he holds on to it?
So we do have reference to ITC as a disclosure of positive coverage. Initial targets that we are working out is about 335, which is not very far from where the stock is trading at. So stay invested, and if you get opportunities up 285, 280 levels, buy more on ITC definitely.
He also has 10 shares of ONGC. What would you recommend he does with this stock?
So I am of an opinion that the stock, again, our disclosure, we have a positive coverage, 345 is the target. And my belief is that the government is going to do much more in terms of getting more approvals cleared for the oil and gas exploration company and reducing our dependence on the imports of crude. So I think that's going to be a much more bigger catalyst for oil exploration companies, especially names like ONGC and Kain India and Reliance Industries.
All right, next on his list is Adani Power. He has 10 shares, which he bought at 65 rupees. So that's not a very large holding. But speaking about Adani Power in particular, we did talk about the power sector some time ago. Is this something that you'd like to put your money on?
So my view is that this is a no-brainer. He's got a very small quantity. Exit from here, buy something like an IRB Infra, which is quoted at I think about 110, 120 odd levels. Quite optimistic that things will look better. And recently the company has got awarded a couple of projects. The numbers were very good. Execution-wise also it's a par excellence. With a target of 175 to 180, you can definitely switch on to IRB Infra.
One last stock on his list. He has 11 shares of Hexaware, again a small holding. Now, when you recommended small cap IT to us, you did not mention Hexaware. You mentioned a couple of other names. So this is, would you say this is a good choice for him, or should he be shifting into one of the names that you mentioned earlier?
I think close to about 126 or 130. Mahindra Satyam is a much better bet, and I think that merger has got postponed by about 6 odd months, waiting for the approval from the respective authority. So here again, you have a classic case. So if you are a hardcore IT fan, then yes, Mahindra Satyam could be the one. But if not, then I would say that direct-to-home segment and digitization process, the way it is underway, largest player in this particular segment is Dish TV. We've recently seen a sizable amount of correction, close to about 65 or 66. Your downside is protected. Look for a target of about 85 on Dish TV. So it's his choice, whether IT or something like related to the entertainment sector.
All right. Unfortunately, we've run out of time on this show, but remember, you can send in your stock portfolio. We'll take a look at it and tell you what you should be holding on to and what you should be selling. Gaurang, thank you so much for spending time with us. We hope you enjoy your long
Always
weekend.
a pleasure.
See you back on the markets on Monday morning.
You too.
All right. There's a Facebook page as well where you can find a copy of the show if you'd like to take a look at anything or you missed something. Thanks for watching.